Hello, good morning. This is Ayazuddin S Khan from Pune, Maharashtra State, India. We are in the process of getting familiar with basic things about Income Tax Act 1961. And in this chain of knowing basic things about Income Tax Act 1961, we have today capital asset as basic things for our understanding and discussion. Capital asset as you know, or rather, if you go through the Act or go through various provisions of the Act, what we find that we have to sit for a long time with Income Tax Act 1961 to listen to its story about capital asset. From the tale-telling of capital asset, what we gather is this. One, that capital asset is important phrase for the taxpayer as well as the income tax department. Second thing, that it gives birth to the capital gain. Capital asset gives birth to the capital gain. And the third, that provisions of capital gain are closely connected to the provisions of capital gain. And it would not be wrong to say that provisions of capital gain are closely connected to the capital asset. Both are made for each other. That is, capital gain, capital asset and capital gain are made for each other. The third thing in this context is transfer. Transfer simply means sale of your asset, whatever asset you have got. If you sell that comes under transfer. So these three things, capital asset, capital gain and the transfer, are closely connected to each other and contribute to the computation of capital gain. Governments all over the world including domestic government or international government, they feed on tax revenue. And capital gain is one of the important components of tax revenue. Capital gain, as I told you, is linked to capital asset. We have discussed just now, capital asset gives birth to capital gain. So, capital asset and capital gain and transfer, these three things, if we mix together, then one is able to work out the capital gain correctly. So this way we have to understand. So what I am discussing right now, this capital asset is very important to the government as well as to the person who has got surplus money in his hand or in his pocket to invest in some capital asset. And it is important, what you call very important source of income to the investor. So this capital asset topic or capital asset is on the height of popularity. It is very popular among the investors. Investor means those people who have got surplus money in their hand and they can invest money and earn the what you call income, investment income. That way we can understand. So this is very lovely phrase for the investors all over the world. So in against this background, knowing of this term is important for a student. You must know what is capital asset. So when it is, it has got so much importance and it has become the earning source for the investor, then rather we become eager to know about this term, capital asset. Capital asset simply means to understand in a simple way. Legally, the import of legal thing is the same thing. That is what I am telling you now. It is not different. So it is better to have understanding of this term or rather phrase, capital asset, in a simple way instead of going into the complications of legal framework or legal definitions. So capital asset in simple word is your property. Capital asset means in a simple word it is your property. Let it this property now, this capital asset and that we try to understand in a simple way that it is some property. So actually from legal point of view, this phrase capital asset has got three parts of description or definition or explanation. It runs into three parts, though there are no actually physically three parts in the act, but simply we can make out after reading these provisions of capital asset, capital gain and whatever provisions of transfer, we come to know that this phrase capital asset have three parts. And first part, Income Tax Act 1961 defines the first part of this phrase capital asset. And what are the sections? You please note down these sections. And for detailed reading, you please note down this section. Sections which define part 1 of this capital asset, and those sections are like this. Section 2 of Income Tax Act 1961. Then Section 56 of Income Tax Act 1961. And finally Section 269 capital A, 269 UA of Income Tax Act 1961. So these three sections, though they are not at one place, they are at different places rather. So these three sections, they tell in detail about what is capital asset. So remember this thing, note down this thing. Section 2 of Income Tax Act 1961, then again section 56 of Income Tax Act 1961 and section 269 UA, U capital A capital of Income Tax Act 1961. These three sections give details about this phrase capital asset. Then the second part of the capital asset, the securities contracts regulation act 1956, securities contracts into bracket regulation act 1956 come on the stage to tell about the second part of the what you call capital asset. First part is what you call is the is the duty of Income Tax Act 1961 to tell about the capital asset. First part. Then second part, this what you call Securities Contracts Act 1956 come on the stage to tell you about second part of capital asset. What is capital asset? Then the third part, your what you call the Government Securities Act 2006 comes on the stage after Income Tax Act, after your Securities Contracts Regulation Act. This act, the Government Securities Act 2006 comes on the stage to explain what is capital assets. So these three acts tell their part about this what you call capital asset, and then we get the idea, full idea about this phrase capital asset. So this is what you call as I told you, we have to sit for a long time with Income Tax Act 1961 to listen to its story about capital asset. We have to sit for a long time with Income Tax Act to listen to its story about capital asset. So these are these things take the what you call time to tell the act about this what you call take these three acts to tell about capital asset, and necessarily we have to give that much time. As long as it takes that whatever time they take, we have to be with them to know what is capital asset. If we are really seriously interested to know about this phrase capital asset. Okay. Capital asset, as I told you, so we have learned this gives birth to capital gain. So, and in the what you call all over the world, not only in India, but in on the world level, investment market is flourishing like anything. And what is investment market? Market where people who have got surplus money in their hands, they invest money or they purchase some capital asset, that is property. We'll see the types of properties or types of capital assets. They purchase and they earn the income. How they earn, that also during the process of this lecture we will come to know how they earn. So in the international, domestic and international market, investment market, this capital asset has become very, very popular, and it is rather on the height of popularity among the investor. It is a lovely thing for the investors all over the world, not only in India. So, when we what you call read about this, we heard about all these things about capital asset, naturally one will become eager to know actually what is capital asset. So, capital asset, let us go to understand this phrase, capital asset. Capital asset, in simple words, is a property. Capital assets mean, in simple word, it is a property, your property. And what is your property? So, then listen carefully. Property. Capital asset means property. And what is your property? If you are owner of some plot, then plot is your property. That is capital asset. Followed? If you are owner of some plot, vacant plot, then that is your property. And Act, the Income Tax Act 1961 calls it, this property, this open plot, which is your property, Tax Act calls it as capital asset. Note down, remember this thing. Then second thing, if you build some structure on your this vacant plot, then that structure on your open plot becomes your property, is your property, which is Act calls it as capital asset. Followed? So, your open plot, if you are owner, this is your what you call, then it is your capital asset or your property. Capital asset, in simple word, it is property. That way you must understand, first thing, basic thing. And if you go inside this term, so this what you call plot, open plot, you are owner of that plot, then it is your capital asset. And then something you build on that open plot, then that what you call building work or that structure is your property, that is your capital asset. Then third thing, you may be owner of only plot and not structure, or you may be owner of structure only and not plot, or you may be owner of both plot and structure. Then in this situation, your property is your plot or your structure is your property, or plot and structure your property. If you are owner of plot, but you are not owner of structure standing on your open plot, you are not owner of that structure, but you are owner of that plot. Or if you are owner of structure and not what you call plot, then your property is only structure and not plot. Then suppose you are owner of both plot and structure, then your property is plot and structure. This way we have to understand it. It depends on the legal right that you enjoy in the property you hold and you are owner. So legal, what type of right you have got in the property, if this type of mixing is there. Simple understanding is like you are the only owner of some vacant plot, you are owner and that plot is your property, it is simple thing. If suppose you are owner of open plot and something is you build up or constructed some structure on your open plot, then your property is not only open plot but also your structure. Your property includes open plot plus this what you call structure standing on it. So this way simple. But out of this plot and structure, if you own one thing and you don't own another thing, then you have to think and come to the conclusion that if you are only owner of plot and not structure, then your property is plot. But you are not owner of plot, but you are owner of structure, then your property is structure. And then if you are owner of both the things, plot as well as structure, then your property is plot and structure. So it depends, as I told you, it depends the legal right you enjoy in the property. When the situation is, when the there is first type of situation, that means you are owner of plot but not owner of structure, or you are owner of structure but you are not owner of plot. In this situation, concept of legal right in the property comes into play. So whatever right you have got, that will decide your title or ownership. So this is about, we are discussing what is the types of capital assets, which is very important for government, taxpayer and investors. The investment market is standing on this capital asset only, or rather it is alive. It is alive because of the capital asset. Okay. So this open plot, then structures you made on your plot, these both the things are your property and they are capital assets. Okay. Then third thing is what you call your agriculture land. If you are owner of agriculture land, no doubt it is capital asset. No doubt it is capital asset. But see, the Act asserts, though it is capital asset, but I say, I am the sovereign, I say, it is not capital asset and no tax is payable on the capital gain. You should not pay any tax if you are owner of what you call agriculture land, though it is capital asset. And if you sell your agriculture land, then whatever profit you get on selling of your agriculture land, then if you earn some profit on sale of your agriculture land, then you should not pay any tax on the profit or capital gain. That is the exemption given. And reason is simple. They want to protect, government wants to protect the poor farmers from tax burden. Okay. So open plot, then what you call your structure on the open plot, or open plot plus structure. These are three types, and exception or exclusion. This is agriculture land. Act say, though capital asset, no tax is invited here. This third. Then you see equity shares. This we are discussing capital asset, types of capital assets or property. Then in this line comes the number of equity shares. Equity share is capital asset, or equity share is what you call your property. And every capital asset has basically the nature or quality or inbuilt quality or inbuilt nature to give benefit, to give financial benefit to its owner. Okay. So equity share also brings financial benefit to the holder or owner of that equity share. How? It is simple. In the market, if you sell Your share is the share of some popular company, and popular company means that company which gives you handsome dividend every year. So that way, that we have to understand this popular company which gives handsome profit, handsome dividend to the owner of equity shares. Okay. So equity shares is another type of capital asset. We must know this thing, equity shares. And then comes units of mutual fund. Units of mutual fund. This is another type of capital asset or your property. Units also you can what you call sell and what you call earn the capital gain. On selling, you purchase at some lower price, and after selling you get some higher price. Difference is your profit. So you get profit. So this is the I told you. This is the nature of the capital asset, to give financial benefit to its owner. So units also bring financial benefit to the owner of capital asset. Here capital asset we are discussing units of mutual funds. Then comes your what you call your gold ornaments. Gold ornaments. Gold ornaments. There are I don't think these husbands husband like golds. I don't think that is my what you call perception or my understanding, simple understanding. These husbands hardly love golds. And who is the lover of golds? Ladies. Wives are after gold. They want golds and various types of ornaments, gold, silver, all these costly things they like very much. And purpose everybody knows. The purpose, that is not the investment purpose there, that thing is sure. Okay, so this is jewelry or your gold ornament is also a type of capital asset. And if you sell that what you call this capital asset, your jewelry in the market, gold market, then you may earn profit, because you purchase at lower price, and market is what you call very hot, in the sense gold prices are kissing this is another phrase, gold prices are kissing the sky. Gold prices are kissing the sky. That means the prices are very high. Then if you are investor or your wife is investor, is a remote possibility, but let us assume your wife is investor. So if she sell that ornament, so she may earn the profit, she will get the profit. So this quality of capital asset has become visible. That is, it brings financial benefit to the owner of that capital asset, that jewelry. So after jewelry, then another varieties are there of capital assets. But I think only for academic study, we must know about these other types of capital assets for academic study. As per my knowledge, it is up to you, because I told you the authorities, sections, I have told you, sections of Income Tax Act, sections of the Securities Contracts Act 56, then the Government Securities Act 2006. I have told you the authority. You can go through those sections, section 2 of all these three. Section 2 is the common section to define or tell about this capital asset. So, but now we are discussing the various types of capital assets. So far we have come up to jewelry. But this another, after jewelry, there comes bullion. 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 Bullion is pure gold or uncut gold. We may say uncut gold. We can understand bullion like this. It is basically gold or silver in the form of brick, in the form of brick or bar, in the form of brick or bar, in the form of brick, or in the form of uncut gold or uncut silver, or the the form of gold or the form of silver before converting it into ornament. The form of gold or silver before converting it into ornaments. That way we have to understand this variety, that is bullion. It is also capital asset. It brings financial benefits which you sell that bullion in the what you call gold market when the prices are high, when the prices of gold are very high. So you will get you would get profit. You would get profit. So this quality of giving financial benefit to the owner of that bullion is fulfilled here. So remember why I am repeating this word, the quality, inherent quality, the base natural quality of capital asset is this, to bring financial benefit to the owner of that capital asset or that property. So that is why so important. It is a source of earning to the investor. It is a source of earning, or rather source of revenue to the government also all over the world. They feed, governments feed on tax revenue, and capital gain is one of the important components of government revenue. And capital gain no doubt depends on capital asset. If you sell your capital asset, that is your property, all these types we are discussing, you get some profit. So you enjoy this money, government enjoys tax revenue. So it is like this. So this bullion we have discussed. Then comes, there are other, this no doubt other types are there. Number of types of what you call capital assets are there. But as far as I am concerned, I feel those are of academic interest only. Not they are not what you call traded. They are not what you call purchase and sold. Purchase and sold. Purchase and sold activity or transaction. Transactions of buying and transaction of selling. If this such type of transaction is complete, then there comes profit, isn't it? You purchase gold or you purchase your plot, something. You purchase. Then after gap of some time you sell. So transaction of purchase. Then when you sell, this is a transaction of sale. And when both the transactions are complete, you get some profit, that is capital gain. So these other types of capital assets are of, as per my understanding or perception, are of only academic interest. And what are those other types which are of academic interest only? Though they are capital asset, and they may bring huge profit also, though in spite of all these things, they are not traded frequently, they are not bought and sold frequently as your gold or as your open plot or as your building or not, or your equity shares of this thing. So not that way, not that type of frequency. Now, investors don't go for this what you call. So anyhow, we'll finish off this what you call other non sorry, other academic items of academic interest, items of capital asset, that is types of capital asset, which according to me are what you call are of this academic interest, and those are, if you hold some archaeological collections, if you hold some archaeological collection, that is historic collections. So now who is holding historic collections? Only the what you call the children, children of the Sultan or children of the king, grandchildren and grandchildren and grandchildren of some king. They must be holding some what you call historic collections, historic collections. So I don't think common man or these people playing in the people or players playing in the investment market are collecting some historic collection and selling in the open market. Not this is not popular capital asset as far as investors are concerned. Remember this thing. This what you call archaeological or historic collections. If you are owner of such thing, so if you sell, if it has got some value and there is some purchaser for this and you get some profit or some money, so that that is your source of revenue, and government also rightly takes the tax on such in the form of capital gain. So government always demands their share whenever you earn. So government keeps eye. They are very shrewd people. They keep eye on your earning. So wherever there is source of earning for you, and it is valid source, legal source of earning, so government is very prompt to bring that your source into tax network, So rightly, it does rightly, because they have to spend lot of money on public welfare or for public purposes. Anyhow, so this is academic what you call the capital assets which has got only academic value or importance. This is one thing, that is the historic collections. If you are owner of some historic or archaeological collection, then it is your capital. This is also capital asset. Then your drawings. If your drawing is unique, or I don't know, I cannot conceive or perceive or think or visualize or imagine what type of drawings and who makes the drawing and who pays the crores of rupees to the person who makes the drawing, all these things. But Act says, these three acts together say, this rather income tax, particularly this Section 2 Income Tax Act 1961 says, if you are owner of what you call some drawing, unique drawing, then that is capital asset. And if you sell that capital asset and there is buyer for your capital, this capital asset, that is unique drawing, then there is income to you, and government immediately gets the light. government becomes alert. They know this fellow has earned this, and they keep watch on the person, who are the persons who they have got their own system, mechanism, device to get this information from all sources. Government, it is the wide network of collecting information, and modern technology is helping them like anything, and they are not behind to use that technology to what you call satisfy their tax hunger. To satisfy their tax hunger, and tax hunger, like any hunger, it is what you call but natural. Government needs money, always needs money to spend for public purpose. Okay, so this unique drawing, then comes unique painting. It stands what you call on par with each other. Unique drawing and unique painting. Unique drawing and unique painting. These are the they stand at par with each other, and suppose it has got value, that painting has got value, and there is some person who wants to purchase that for some handsome money and all these things. So it is between the owner of that painting and the buyer of that painting. They will do the transaction, buying, selling, buying, and they will earn the money, and what you call it is source of income, and this capital asset has brought the seller what you call income in the form of capital gain or in the form of profit on selling. So this what you call painting, then your drawings, and your what you call this archaeological collections. These, I think, they are not actually bought and sold frequently, as frequently as the other types of capital assets are bought and sold. So they are not so popular. But we have to study, because that is in the statute book. Those things are placed in the statute book. So we have to study those types of capital assets. Now, there is another variety, that is government security. This government security, this is also what you call a type of capital asset. Government security also type of capital asset. And what is security? We know security forces. We know this word, security forces. And then security people, then security branch. All these things are, security means some protection, some safety to somebody. Somebody is giving some protection to somebody who face some risk. So that way we have to understand. But as far as this investment world is concerned, or financial world is concerned, this has got the same meaning. It gives the same meaning, protection, but see how it protects. So in financial world, the security means, suppose a businessman takes loan from the bank. Some crores of rupees he takes, 2 crores, 1 crore, he takes some loan. So company will find out whether he has got what is his financial position, what is his profit earning capacity, what asset, so many things, relevant things. They are expert people, bank people. Before giving a loan, they are expert, they will check everything. And after satisfying themselves, they would say They would say to the person who asked for loan that give us security for loan so that our loan will become a secured loan. So what does it mean? They ask everything, paperwork is okay. Then finally they ask, give us security, and they will ask security of their own choice. Who? Bank, to the person who asked for loan from the bank. So this security may be government bonds, he will give some government bonds, or he will mortgage his land or his open plot or his structure, building, etc. Or he may give as security his plant and machinery. So many types of securities are there. So once they get these things, that is the desired type of security, once the bank gets the desired type of security from the person who asked for the loan from the bank, then their loan becomes secured. And they say, we have received the security from the loanee, that is the person who has taken loan from us. So we have taken the security. That means in case he fails to pay our loan, he totally fails to pay our loan, so we are protected. See the concept of protection. Security is linked to concept of protection, concept of protection. So they say, if suppose that fellow, then loanee, our person who has taken loan, has become bankrupt, that is, he is not in a position to pay the loan taken from the bank, then bank has got security in their hands, and they will encash that security. They will encash that security. That means they are protected. Their interest, financial interest, their loan amount is protected. Their loan amount is protected in this sense. If suppose that person who has taken loan from this 1 crore there, he has taken, businessman has taken loan of rupees 1 crore from the bank, and he has got the property or the fixed deposit of 5 crores, 10 crores, and that he has given as security to the bank. Then it is up to the choice of the bank to select the type of security they want, and they will accept that security. And in case failure comes, non-payment of the loan amount comes, it becomes final, then they will encash that, they will convert into money. Now, if suppose FD is there, that FD they will convert and take the money from that amount, and I will ask that bank to credit to their account, bank account. So in this way, this is everything pre-decided. It is done everything in writing between the money person who asked for the loan and the bank where that loanee or the person who has taken loan from the bank has kept the money or property. So all this is the legal matters, and that is reduced to writing by all concerned in these transactions. So okay, so what I was telling, your government security. Government security, so what is security? Security means protection, guarantee, or in simple words, guarantee of payment. Guarantee of payment to the person who has given loan to the government. Government security means this thing, guarantee of payment or guarantee of repayment by the government to the person who has given loan to the government. So you should not surprise Why government is taking loan? Government, sovereign is taking loan. So you need not get surprised. Everybody now, everybody takes the loan, whether sovereign or what you call poor man. Everybody needs money, and there are money requirements are more, whether it is government or citizen. They take the loan if they have got capacity. So government when takes the loan for some project, or when government takes the loan for public purposes, when government takes for public purposes, so what you call they give the guy naturally person who gives loan to the government, he will ask, "Oh, if you make default, you don't pay, then what about my money?" So government said, "Don't worry, this is in writing." They give in writing security. Security means guarantee of repayment. On paper they will write, "Yes, we are responsible for repayment of your loan." So that becomes what you call government security. It has got different forms. That is another what you call stream of discussion. So there are, but normally their government security, normally bonds, in the form of bonds, government bonds. They call it government bonds. Bonds, they, they no doubt it is capital asset. They bring financial benefit to the owner of that capital asset or property. So government security, normally we can understand their bonds, government bonds. They issue the bonds for 10 years, 15 years, and they give the interest to the what you call the buyer of that bond. And on maturity or during this what you call process, if that investor, one who has purchased the government bonds or government security, we may call precisely government security. So that fellow investor or buyer, he will get periodical return in the form of interest. So that is the attraction of government security. That is the only attraction of government security, not other things like equity shares. So here we'll compare this security, we'll compare this capital assets as far as their earning capacity is concerned. Capital asset, why people are after, or rather why investors are after this capital asset, because it brings financial benefit or income to the owner of capital asset. So here we will discuss something about the who brings more what you call financial benefit or income to the investor or the person who buys that thing. So government bonds are government bonds. Then your company's preference shares are the least popular capital assets. And why? Why government's bonds and the company's preference shares, though they are capital assets, why they are the least popular types of capital asset? You know why they are least popular? Because they only give the return, fixed return. Bond, if you purchase if you purchase bond, you will get periodical interest, though no doubt at higher rate, because you are investing money for a longer duration, 10 years, 5 years, 10 years, 15 years, like this. So naturally government also gives good rate of interest, very good rate of interest as as the reward for return for long-term investment by the investor or buyer. So this is nobody, very few people go after these bonds. in the market, investment market, very few people run after this type of capital asset, bond, government bond, because they know there is no benefit, only periodical interest, and no other benefit like equity shares or units. You followed units and equity shares. Now we will discuss units and equity shares. So they don't go after bonds, and then that means bond is not popular capital assets for investor. Then preference shares. Preference shares also stand on par with the government bonds. Preference shares. What are preference shares? They get on liquidation, they get the preference, and when somebody buys that shares of the preference shares of that company, some company, so they get only dividend. Annual dividend they get. Whenever a dividend is declared, they get the dividend. No doubt some at higher rate. They get the dividend. Okay. So this is the only thing. People, investors don't run after this preference shares also because they don't bring more benefits. They don't bring more benefits as equity shares and units bring to them. Now let us go to equity shares. Equity share, remember this thing, equity shares is the most, equity share is the most popular capital asset among the what you call investors. Investors all over the world, not only in India, in foreign market also, wherever companies are giving high dividend at higher rate, isn't it? So those companies who pay a higher rate of dividend or rich dividend to the investors, or rather buyers of their shares, equity shares. So what happens? The person who has bought or purchased those equity shares of that company which pays annually handsome or rich dividend to the owner of equity shares, then what happens? That fellow, that investor gets handsome dividend every year, plus because company is paying higher rate of dividend, so people to earn the higher rate of dividend that you don't get when you put your money in the FT, fixed deposit, that you don't get when you buy the government bond. You, that benefit you don't get when you buy the preference shares of some company. So, but equity shares of company which pays you handsome or rich dividend every year, their shares are chased. They are chased like anything. I mean, what I mean, chased like anything, their shares, investors are after those shares. They want to buy those shares. And why they want to buy those shares? Because they get the double benefit. One in the form of the rich annual dividend from the company. Then second thing, if they want to dispose of, or if they want to part with that, they want to sell that shares, equity shares in the share market or investment market. So they sell when the prices are very high, and these equity shares, these capital asset, equity share, this capital asset is most popular, and just like a beautiful young girl, chaste, everybody wants to have that beautiful girl in marriage to himself. So that way, we can understand that way. So this so popular, so attractive equity shares. So of not all companies, equity shares of only those companies, domestic or foreign, who pay what you call rich dividend. their shares in the market are in demand. Investors chase those shares like anything, and people don't, they wait, they enjoy the dividend, they don't sell. They don't sell so, what you call, quickly. They wait when the prices kiss, kiss the sky, or they are very, flying very high prices of equity shares of those companies who pay what you call handsome or rich dividend annually. The equity shares of their prices of their equity shares, they what you call, their prices are fly very high. Then investor or the owners of that equity shares, he just calculates, I purchased this equity share, or I purchased these equity shares for this amount. Now if I sell in the share market or investment market, I will get this amount, very handsome amount. So different profit is very high, enjoyable, satisfactory. So he will sell, earn what you call, this handsome profit, or we may say in the language of law, that is capital gain. So the moment you get that income, that fish is caught. Fish is caught. The moment you get the income, you enter the tax network of income tax department. You automatically enter the tax network of the income tax department, and you have to pay what you call income tax on your profit. And that taking of tax on your profit by the government is a right demand, or right tax demand from government side. And we have got, we should not what you call feel anything bad about that compulsory taking away some profit by the government. You have to understand like this. They have a lot of burden, financial burden to bear, and they need more money to satisfy the public, public demands or amenities, welfare activities, development work, so many things they are they have to spend the money. So tax is one of the sources of their income. Okay. So equity shares, this we have already discussed capital asset, various types of capital assets, and I have told you bonds and preference are not preferable, but equity shares and units are preferable. Now we will come to units of mutual funds. This is another what you call capital asset, a wonderful capital asset. And see, this has come in the market, investment market. For attracting the investors, the people who love the business of investment very much, though they have got what you call surplus money in their hand, so they put money in the units of some mutual funds. Mutual fund is run by banks. They run mutual funds. Some companies, they have what you call mutual funds. Mutual funds, and they sell instead of share. Company to get the money, they sell their share, equity shares, preference shares. Government sell their bonds. Like this, these people, mutual fund people, or the companies who have got mutual fund, the companies who is doing the business of mutual funds, banks or companies who do the business of mutual funds, they sell not equity share, not preference share, not bond. They sell units. They call it units. So they sell units. Now, another wonderful point about this unit is like this. What is unit? And here you must remember, in the investment market, to have the knowledge of investment market, it is not that easy. It is not. You may have MBA, you may have some commerce education, or you may have education in economics, or you may have some good practical experience about buying and selling capital assets, or what you call investment instruments, they call. Sometimes capital assets also call instruments, investment instruments. So when you don't know anything, you are newcomer to the investment market, and you have got surplus money in your hand, and you are fed up with equity shares, and you fed up with the what you call preference shares, and you are fed up with the government bonds, and you are fed up with the what you call fixed deposit scheme. So you are fed up with all these things, and you want new thing or new capital set or new instrument or new security where you want to invest your money. So in that situation, you don't have knowledge. You have got money only, but you don't have knowledge where which company share you should buy, and which company share you should not buy, which company's bond you should buy, and which company's bond you should not buy. When your investment knowledge is zero or minus, then in that situation, the what you call the agency, the great helper, mutual fund, the great helper, the mutual funds come into picture. They come into picture. So Sachin Tendulkar, I have seen some advertisement on TV. Sachin Tendulkar and another ex-captain. These both the captains of Indian cricket team, they advertise mutual units of mutual fund, and what they say is correct. In the TV ad, they say they tell the truth. These two captains advertise the units of mutual funds for the investors, and whatever they tell on the TV program, in the advertisement section, so that is truth, whole truth. Because mutual funds, here this you are what you call, you don't know anything about the investment business, you are very new. Then in such and you are new, and those people sitting in the mutual fund company, they are expert, they are very senior, very matured, spend much of their lifetime in this business, investment business. So such people are sitting on the other side, and you are this side, you are blank, Then in such situation, you go to some mutual fund company and tell your story. I am new, I have got money, but I am new, I don't know where to go for investment, whether to purchase shares, whether to purchase preference shares, whether to purchase bonds, or whether to purchase units. I don't know what is unit. All these things you tell honestly to the what you call expert sitting there in the mutual fund company, and he will guide. Honestly, he will guide you, and you put money or invest money if you are satisfied with their what you call proposal or clarification. You invest money in the mutual funds because you are new, and those people are experts. So another thing about mutual fund, the plus point for the investor is like this: his money, though he is new to the market, his money is very much secure and safe in the hands of mutual fund. Why, I will tell you. very safe and secured in the hands of mutual funds. The another aspect of this mutual fund is like this: if investor, person who has got surplus money in his hand and he wants to invest in the mutual fund, or he wants to invest in the units of mutual fund, some mutual fund company, then this mutual fund company takes the money from the investor. If suppose they have got 100 rupees in their hand, or for that matter, for example's sake, if they have collected investment amount to the tune of 1 crore rupees, then equal amount, that is another 1 crore from their pocket or from their cash box, they will put along with your money, and they will use their expert knowledge of the investment market. They will use their expert knowledge of investment market and invest your money and their money simultaneously into the what you call into the most appropriate security or most appropriate capital asset, so that your what you call your return is assured. Your return is assured, and moreover, these people do not work. Mutual fund people, they do not have 100% freedom in their working. In their working means in their working or in their operations, business operation, investment operation, they don't have 100% freedom. They are regulated. They are regulated means government is after them. This is the way you have to walk. If you don't walk this way, the way we suggest or laid down or given you in writing the way to walk, and if you leave that road way, then you have to pay the penalty. So that much regulation, that much control, government control is there on them. On mutual funds, they don't have full freedom. They cannot play with the money of investors. They cannot play the what you call money of their own investors. So they have to be very careful. So this is about this capital asset. So as far as I am concerned, there are number of securities, and those securities are mentioned in these three acts: Income Tax Act, then Securities Contracts Act, Securities Contracts Regulation Act 1956, and the Government Security Act 2006. So all these things are spread up. Some securities or capital asset explained in this act. Some securities or capital assets are explained in another act. So all these things you have to read along with each other act, and that is why I told you initially, note down the three sections. This is section 2 of Income Tax Act 1961, then section 56 of the same act, then section 269 capital UA of the same act, that is Income Tax Act 1961, then section 2 of Securities Contracts Regulation Act 1956, section 2, then section 2 of the Government Securities Act 2006. These three acts you note and read the section in detail and have the confidence about these various other types of capital assets. Though these are the things I want to discuss, and this capital asset is basically after listening to this discussion, you will definitely appreciate or will be satisfied. Yes, this term or phrase is very important, and this is no doubt basic things about Income Tax Act 1961. It gives revenue to the government, it gives income to the investor, isn't it? So, and it keeps the investment market running, keep the investment market hot, and so many people are employed, so many things are there in that investment market. So, so this phrase capital asset is really plays important role in the modern world. So we have learned it is basic, no doubt basic thing, one of the basic things about income tax 1961. So these are the things, but before leaving or before halting here, I would tell you one thing. This various gold bonds are issued by Government of India, central government, various gold bonds issued by central government on various occasions in the past, though they are capital asset, but Act asserts that no tax is to be paid by the owner of that bonds, gold bonds, if that owner sells that in the market and earn some income, that is in the form of capital gains. No tax is payable. That is for gold bonds, this is the exemption is there. Then agricultural land we have already discussed. This is also enjoys the exemption of the Act, agricultural land. And so there are some exclusions and exemptions are also there, and moreover another in the list of exemption, there is one item, that is furniture. If you sell your furniture is not capital asset, that is asserted by the Act. Furniture is not the furniture that is there in your office or in your home, that is not capital assets. If you buy, sell and you get profit, that is no tax is payable. This is because that is not capital asset. Okay, furniture is not capital asset. Then the things you wear, your clothes, your rich clothes, howsoever costly they may be imported or otherwise, and they may be costly, very costly. So those personal clothing or personal garments, your personal costly imported, whether imported or not, but costly garments are not capital asset. That is what Act asserts. So there is no question of capital gain and tax, etc. So these are the things, general things I have told you. I have not gone in the legal complications of this phrase. There are government. The act is act. It should be precise. It should be very precise, because this people, income tax department or law ministry or the drafters in the law ministry, drafters of the Act in the law ministry and the income tax department, they cannot loosely write anything in the Act. They cannot loosely. Why? Supreme Court very strict when the situation demands or the section application of section is concerned, application of some section is strict, or interpretation of section is concerned. When strict interpretation of section is called for in Supreme Court, when the judges say this case calls for the strictest interpretation of the section, and there are some loopholes or something casual has come because of law ministry or because of income tax department, so government has to suffer very badly. That decision will not be in their favor. They will lose the case, they will lose the tax amount, everything. And then they have to wait till the budget session, and they will bring the amendment the way they want. Okay. So I think I will take halt here. Thank you very much for watching this video, and we'll meet again shortly with another what you call basic thing, and shortly we'll touch our main topic also, that is what you call subject-wise income tax disputes and Supreme Court judgments on them right from 1970 to 2020. Okay.